Okay, so here's the deal. Many of you guys may know this or you may not know this, but when it comes to your credit, it is crucial that you understand that it is broken down into 5 categories. Say it with me. How many categories, class? 5. So I'm going to break it down for you. The first one is your payment history. And what your payment history is do you pay your bills on time? And what does that mean? That means, like for your credit card, stuff like that. Do you pay it on time? Many people will be like, which bills do I pay first? Totally not financial advice. But what I would say, what you should pay, the first thing you should pay should be your things that report to your credit. That is the first thing that I would pay if I were you. That is what I would pay if I were you. Now, the thing about it is that is 35% of your grade. Kind of like in school, you got all these assignments and your teacher says, hey, this will be a certain percentage of your grade. That's how that works. So what you're going to do is you're just going to make sure you pay these on time. In the event that you got a late payment, it's not a problem. We'll get you figured out. But you just don't want to make it a habit. Now, the next category is our credit utilization. What that is how we manage our credit cards. So, in a nutshell, how it works is you have a credit card and you have a specific date that they report your balance to the credit reporting agencies. And it's up to you to know that date. They should have told you. Maybe they told you. I'm sure they told you. Maybe you just weren't paying attention. Maybe you didn't look at what you were signing. It's okay though. Just call and say, what day do you report to the credit reporting agency? And they gonna tell you. And you can change that date if you need to. But make sure your balance is at least 9% of that balance on that date. And it's typically called a statement date. Make sure it's at least 9% of the balance. If you got $1,000, it needs to at least be $90. It's crucial to your report because this is 30%. So 30% of your grade one account taking it out, it can make or break it. So these are things to keep in mind. Next category is length of credit. What our length of credit is 15%. But what that means is how long you've had an account. People talk about closing old accounts. The older the account, the better. But there's ways around it. If you don't have any credit history, you can get you something called an authorized user. Say it with me. Authorized user. Say it. Authorized user. So that's all you gotta do. Get your authorized user, or you can go buy you a trade line. DM me for more info if you want some. Our next category is our credit mix. Credit mix is your ability to manage a revolving account and an installment account. What the difference between those two is, revolvings are your credit cards and your lines of credits. Are you maxed out? Are you not maxed out? Installments would be your student loans, mortgages, car loans. Now, do you have to go get a house or a car if you're trying to go get a car to have good credit? No. You can go get something called a secured product. Secured products at the banks, that's your secured cards, meaning like you give them money and then they give you a card back and you just keep it at 9%. They got the secured loans where you get you a little loan, you get them some money, and then they give you the check. And then you just pay it back to 90%. And then just wait and watch what happens. And the next category is our new credit. Now what that means is every time you go to the bank and apply for credit, they put a mark on your credit. And when they put a mark on your credit, it just shows how often you applying. Too many can make you look thirsty. But, there's ways around that. Because the thing is if you don't get an account, if you don't accept the deal or the deal don't go through or whatever, you can be like, hey, take that stuff off. Just call the credit reporting agency and let them know. Now here's the deal. I can't do this alone. You can't do this alone. It takes a community. And I can't do this alone. You can't do this alone. It takes a community. And it takes the right community. With the right community, imagine what you can do. With the right community, imagine how, this stuff can be taught. This is stuff that we should have learned we should have learned this in the beginning. We should have learned this at 10 years old. And now we're having to learn this in our 20s, 30s. Some of us teens, some of us 50s, 70s. But it's not too late. Join the community today. That way you can learn. Because in 90 days, imagine where you'll be in your 90-day transformation. You'll have clarity. You'll have understandings. You'll have that I'm going after it. You know, the issue today isn't a lack of opportunity. It's a lack of structure. And structure, it can't be built. You know, the issue today isn't a lack of opportunity. It's a lack of structure. And structure has always been built collectively, not individually.